Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at brevant.com/wins.
Welcome to Markets Now. I'm Michelle Rook with Darren, Frye, Water Street Solutions. We did see wheat, corn, and cattle to the plus side, lower in soybeans and hogs on Tuesday. All right, Darren, let's start off talking about the wheat market. We don't talk about this very often, but wheat seemed like the leader on Tuesday. Was that market putting in a little geopolitical risk premium?
I think it was. I think you're right, Michelle. We've seen wheat not really perform very well for a long time. Funds still love it for their short side, and they've been pummeling it for 2.5, 3 years now into the bottom. But we saw wheat kind of pick it up today. It's been lagging. Soybeans have been the leader since the end of September. Corn's been caught in the middle. Wheat has been bringing up the rear. But today we saw a bullish engulfing day on the candlestick charts. We saw a reversal. Wheat was down early. It came back, closed okay, closed decent. And I think it has to do with all the rhetoric around Putin, Europe, NATO, Rubio not going to the meeting. Peace talks supposed to be happening while tankers are getting sunk. Ukraine's escalating things. Putin is striking back. And boy, I don't know. I don't know if we're going to see peace over there. I don't know if anybody really wants peace other than our president here, who'd like to see peace in that region. So we'll see. But wheat did respond today to something. It was probably those political tensions.
What about the corn market? Did it just follow wheat? And since we did get above some key moving averages, can we keep that technical momentum going and build on it?
Well, the first question, did it follow wheat? I don't know if it did. Corn's been trying to really lead wheat out of the basement, in my opinion, over the last month or so. Corn has acted better than wheat, but not much better. But today it really came down in that March contract at 443 and did a nice reversal off that. Do I think it can continue? I do. I think we can move up into that, let's call it 475, 480 area. This would be, over some time here. It's not straight up. We'll go up, we'll come back and base a little. We'll go up again, come back and base. No markets go straight up or straight down. But I do think we can move higher. And I think beans will move higher as well. I think all three of these markets are set to, grind higher here as we get into the new year.
So what does it take for corn to keep going here fundamentally? Because it feels like these record exports that we have been seeing in the export inspections report, they're already priced in. So do you need lower yield? Do you just need soybeans to keep going or what?
I think it's a combination. I do think that we need a lower yield. I think we need the government to say something less than 186 in January. And I think they will. I think the yields from my standpoint, working with our grower base, corn yields are suspect here to be record, where soybeans could be record. They're very different as far as how the yields came in off the seat of the combine. So we'll have to see, but that's one component. The other component would be, does China end up taking some corn? I think we're in a position to get it as compared to South America. I think they're running that program down and getting ready to start exporting soybeans. So as they wind that corn export program down and they're using more for industrial use, we could get any of that business that would come to us through China. I'm not saying China's going to buy, but boy, if they do, that would benefit us. The other thing I think that is possible is just the fact that we might have a situation as we move forward on the balance sheets that we see Brazil just use a lot more of their export book for industrial use. We know they're ramping up ethanol. And I think when you combine those three things, I think that's what lifts corn into that 5 or even 5.25 area. And I think we can get there by sometime in April or May, in my opinion.
But Darren, China's corn price has been moving up. This feels eerily like 2020. Is it possible they need corn or they will?
It is possible. I mean, if you take a look at Dalian corn compared to the March option here, it's competitive right now. They really haven't imported much corn since we saw them hit a high in 22. And so for 3 years, they just haven't taken anything from really all parts of the world. So if they need to import, I imagine be more sorghum, some wheat, but they might have to take corn as well. And we would benefit from that if that actually occurred.
So Darren, soybeans ended lower today, but started off higher with the news that Bloomberg said that China was going to take all 12 million metric tons of the purchase agreements that they had with us on soybeans. They were going to do it before the end of the year, but we didn't end higher. Is the market just need proof of that?
I think so. I think the market is very skeptical that China's going to take this 12 million metric tons, whether it's by the end of the year or first quarter or whatever. A lot of people just don't think they're going to take them. I do think they're going to take them. I don't know how long it's going to take them to acknowledge that or to then ship them. But I think the market is really set to sell every rally in the fact that they don't believe it's going to happen. Nobody really is buying breaks. I don't think the market probably is going to go down a lot. I think it's going to go higher. I think it's in March above the $12 area. And I think that's going to happen as we move into spring. We're in a strong seasonal for up. Beans turn up in October, stay up till May, and they can rally right through the South American harvest, even if it's a big one. And we've seen that many times before. So I'm friendly beans, but I think a lot of people are selling every rally.
So you are optimistic about China buying all 12 million metric tons. 3 million metric tons supposedly on the books already, 9 million metric tons we got to get done and sold in the next 4 weeks. Can we do it? Logistically, can it be done?
Well, the sales can happen. I mean, you're not going to ship them, but the sales could happen. I'm not saying that they'll honor that by the end of the year. That's supposedly what they're supposed to do, but it could be that they do it by the end of January or something like that. But I do think they're going to buy them. I think that if the trade deal was legit from the Trump administration, they're going to buy them. They got something in the deal to where they're going to buy them. And we don't know what the framework is or all the details, but I think they will end up buying those at some point. If not, Basant, Rollins, President Trump really going to have some egg on their face because they bragged about how they're going to buy these beans. They're going to buy them for sure. And so if they don't, something's really wrong there with their deal.
Yeah. So to retest the November highs or get up to the $12 that you just talked about, do you need the whole 12 million metric tons to be sold, or do you also need a weather problem in South America?
Well, I think some fundamental is going to drive it. There's no way you go there without a fundamental reason. And the two fundamental reasons would be, hey, China does buy the beans and they buy more than people expect them. And that keeps people off balance here and kind of listing one way on the ship as this thing moves higher. The other would be, hey, South America gets into some weather issues. Now, those weather issues would have to be, southern Brazil, Argentina, parts of Argentina, Uruguay, because now we got a good monsoonal flow. Central and northern Brazil is going to get plenty of rain. So it's going to have to be the south. That will not happen with all the moisture they've received in the last 30 to 45 days until we get out into the beginning or middle part of January. So there is a weather issue. It's 40 days in front of us. It's not today. And so we'll have to wait and see. But I think beans can go up based on those two reasons.
But you don't think there's a weather issue yet that we have to worry about in South America, because we've already seen StoneX, some of these other groups, lower their Brazilian production estimates.
Yeah, you don't know if they were just so high and they're coming down kind of into more oxygenated air as they've been very, very lofty on those projections, or hey, there is some issues down there and they're ramping those yields, paring them back a little bit. I don't know which it is, but I do know there was some early damage to some areas because it was so dry. The monsoon never got started. I think now the flow's coming, and I think things will improve down there.
So the cattle market saw triple-digit gains on Tuesday. Some of this, corrective buying, but we did get above key moving averages.
Yeah, I think it's exactly what you said. It takes a while to digest a move. As large as the move was down, it's going to take a little while to digest that. So how do we do that? We have a wave of decay or a wave that's back into that trend. And so a little ABC correction, probably pushing fats on the February up in that 228, 230 area. I would say Jan feeders up in that 335, 340. I don't think you're going to fill the big gap in January feeders, but you could push up into it or the edge of it at least. And I think that'll take place over, the next 3 or 4 weeks of December. After that, I think you can start tipping this market back over in early January and head lower. I think those are going to give us nice hedging opportunities. I think we have highs in place for a while. I think we're going to see the market move lower after this correction is done.
Okay, so you just said you think the highs are in and we're not going to go back up and retest those areas, even if we get higher cash cattle?
I don't think so. I think we've done a lot of damage here, and I'd be surprised if we can get much up above even the gap area that we left. So I do not expect that we're going to make a new high. I think the highs are in. I'm looking for corrective price action to get a better selling opportunity for anybody who is not hedged.
Darren, let's talk about the cotton market today. It has really struggled as of recent. Talk about what the main problem is for that cotton market.
Well, I mean, recently we got a bearish report on November 14th where they upped the production by 900,000 bales. I don't agree with that number. I think it's much less than that, probably half of that. But I think the bigger issue is we've been in a bear market. We've been down in the primary trend. That's the monthly trend for about 21 months. It's a commodity that's very sensitive to the economic activities that we have out here with the economy. And of course, with crude oil going lower and with our president that wants cheaper energy prices, that's how you get polyester. That makes it harder on cotton to compete. And so we've just pushed the prices lower. Funds have become as short on cotton as they are on the wheat classes. We see them set a new record about every third week as far as their short position. So they're piled onto that market to the downside. And so it just has not been able to lift its head up. And we need some fundamental stimulus to get that market going and get short covering going. So far, we haven't been able to see it.
All right. Thanks so much. Darren, Frye, Water Street Solutions. That is Markets Now.
You were right.
You were right.
You were right.
Well, you were right.
When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win, you get to be right. Don't just win, win. Talk with your retailer or visit Brevant.com/win to get started.